Hello, and welcome to Mid-Market Leaders, the podcast featuring leaders from some of America's most impactful but lesser-known companies. My name is Jeff Cass. I'm an executive coach here in Charlotte, North Carolina, who retired in 2023 after more than 30 years of leadership in corporate America, and I'll be your host. My guest today is Matt Bradbury, who is the founder of Business Acquisition and Merger Associates, or also known as BAMA. For more than 2 decades, Matt and his team have represented lower middle market companies both in selling their businesses or acquiring new businesses. Matt, welcome to the show.
Oh, my pleasure, Jeff. Good to be here.
Yeah, good to have you. Do you ever get Bama and Alabama? Do you ever get people that maybe take offense to that?
We've actually got clients because of our acronym being BAMA. And then we had some clients from that other college in Alabama that said, how can I hire a company whose acronym is BAMA to sell my company? And they still did. But it is funny. Some really good stories on how we got clients that way in the past.
Especially in the South with an SEC population down here. And by the way, I want to start with this question because both you and I are from Western Pennsylvania, but both of us ended up down here in the Carolinas. So tell me how you ended up down here.
I've been down here probably 35 years now. I came down in the fitness business. I was an executive in a company that ran executive fitness centers up and down the East Coast of the United States. Some we owned, some we managed for others, some were amenity fitness clubs. That's really where I cut my teeth on mergers and acquisitions because we bought a lot of clubs. We found a lot that were failing and had the secret sauce to turn them around.
Okay.
So we weren't afraid of somebody that was not performing that well. And then we did a lot of startups too. Greenfields was part of our growth plan. And there was an opportunity to move to Charlotte, North Carolina to take over a club that was not running to its full potential. And that's what brought me down to the Carolinas. What a great place to raise your family. Great weather. One quick sidelight. I was at a float party. I live on a lake. I was at a float party over the weekend, and I met another guy from Pittsburgh, and we were commiserating how great the weather was compared to Pittsburgh, where you have sunshine about 30 days a year, and the rest is this gray sky stuff. But still a big Steeler fans.
Okay. So I grew up in Western Pennsylvania. I lived in Cleveland, so Browns fan because I lived there for so long. But that is the biggest thing my wife and I like is the Carolina blue sky, which is amazing. You see it all the time. The amount of sun we see is just makes you happy every day you see it, right?
Absolutely.
Yeah. We could talk a lot about that, but I want to talk about BAMA. So let's first talk about maybe why you wanted to start your business and how you went about it.
Hey, getting back to the fitness industry. So I was there for 15 years, grew up to be the chief operating officer of the business, and was commuting from the Carolinas to the New York, New Jersey metropolitan area for about 2.5 years. 9/11 happened, and I said, you idiot, why am I sleeping in a hotel? You need to sleep in your own bed at night. I had done a lot of acquisitions of smaller companies as part of our growth plan. We were around 65-ish million of revenue, and decided to buy a business in Charlotte. And I put offers on 3 different companies. I was dealing in the Main Street business brokerage space. So I would define that as 5 million of revenue and less as Main Street. And I didn't get any one of them, but I was really disheartened by the quality of representing their clients. And I told my wife, I said, you know what? I'm not going to buy some. I'm going to put my shingle out and help people sell their companies and do it a little bit differently. So that's how I got into this. It's our 20th anniversary this year. I just started that in 2004, but our first clients are really in 2005.
Okay. So when you say Main Street, you mean more like local entrepreneurs. Is that what you mean? Those kind of businesses?
It could still be a manufacturing, a distribution, or a services business. They just are, most of them are kind of 1 to 5 million of revenue. They're really a family Main Street mom and pop business.
I see. All right. Mostly single location. So you were thinking a little bit bigger companies. why are those companies that are a little bit bigger in the lower middle market, why are they more suited to your services?
Most of our clients have an institutional buyer. We run a process for all kinds of buyers, both strategic buyers and financial buyers, and some financial buyers are high net worth individuals. But we find that the institutional private equity group, and I say this all the time, 15% are phenomenal. They're phenomenal. 15% are good. You won't get hurt. And then around 70%, you hope they're not your partner. Okay.
Mm-hmm.
And it's sinks in when someone says, yeah, I talked to those VC guys, and they're typically not VC guys per se, they're regular private equity investors, but they think of them as VC guys. And there's just a cultural disconnect with the way they want to make money and how this business has operated and made money. And so the guys that are the 15% golden, they're wicked smart and they're super humble. I can have guys in the top category go to the best business schools in the country. I have guys in the lowest category that went to the best business school. So it's not how smart they are, but their bedside manner comes in, and they recognize there's a lot of talent in the team that is there, and how can they support that team or that company, looking at that company as its own living entity. How do we let this living entity go and flourish to levels that they didn't realize they could do?
Okay. So you've met a lot of good partners or investors maybe that you go back to, I assume. Is that right?
Absolutely. Absolutely. You know who the best ones are, and you always hope they're interested in your client. Sometimes they aren't interested in your client for one reason or another. Maybe it's not the right geography, the right size, the right something for them at that period of time, or they've got a non-compete because they just sold a business that was in that space. But the best ones are the best ones. And they're consistently, they get better returns. They have phenomenal references. Anybody that they partner with, we observe that it comes down to they're wicked smart, but they don't tell you how smart they are. They don't override your decision. They have this collegial way to navigate a decision, and you think it's yours, and they listen. And then magic happens. Magic really happens when you unleash the power that's in that organization. They really get to throw their ideas out there. And instead of shooting it down, ask more questions that you say, oh, maybe that wasn't the best idea, or, yeah, that's a really good idea. That's a really good idea. Let's go lean into it. We're behind you. They help you have the discipline to really review these ideas to make sure that you're going to make the best decisions most of the time.
Okay. And so the like the lower limit of what you're looking for in the size of companies, and the upper limit, I mean, I read on your website, 5 million to 100 million. Does that sound right?
It's a little higher than that now. It's probably 150 to 200 million. We've had $212 million clients.
Okay.
But I would say the vast majority are like 10 to $60 million.
Okay.
Out of the number of clients that we sell within a given year, we'll have one that's bigger than that and one that's smaller than that.
Okay.
So we really like that 10 to $60 million space, but we're hunting and helping support businesses that are growing up to $200 million in revenue.
And I guess I'm not completely clear exactly why then that range. Is it because the size of the companies fit well with the typical buyers you can marry them with? Is that why that range?
Yeah, I would say most of our network is probably looking to buy a 2 to 15 million EBITDA business. So depending on the business type, you're going to fit in that 2 to 15 million dollars of EBITDA.
Okay. 25% business, that's 60 million in sales, and you get 15 million.
And again, if it's a distribution business, maybe it's 8% EBITDA margin. It's a smaller company. We'll have larger companies that hire us on the buy side, $500 million, billion-dollar companies, public companies. They hire us on the buy side because they want to buy 10 to 60, 10 to 100 million revenue businesses to plug into what they're growing.
I see. So you and I are both working in the middle market, you on the lower end. I think probably I would spend most of my time with people on the lower end as well. But you and I were talking before the show. If you were to ask most businessmen what the middle market was, I think you and I both agreed. Most of them would shake their head and say, "I don't know."
Right.
It's this unknown space, but it's a very important part of our economy. So when you think of the middle market, what do you think about? What size businesses? What does the business look like, feel like, things like that?
I would look at it based on some of the guidance from the SEC on when you have licensing required, and that's at 250 million of revenue and 25 million of EBITDA.
Okay.
So if you're less than that, I would look at that as lower middle market. And then I would look at Main Street at $5 million and less.
I see. Okay. So for you, it's very clear, and the SEC kind of drives it for you. Okay.
And then again, our network of buyers are typically looking for 2 to 15 million EBITDA businesses. That's where they come in and look to help and professionalize a business that size, and then look to double or triple it in size over their whole period of 4 to 6 years.
And these are typically private companies, family owned. What other characteristics do you see from these companies?
Yeah, they're mostly private, family owned businesses. Our breadth of client, it could be a manufacturing company, a distribution business, a B2B services, white collar or blue collar, or B2C services, like the guy who's going to come in and change out your HVAC system. Home services is still white hot. We just had a large transaction in the home services space, and so we do a lot there.
Okay. All right. That makes sense. Yeah. You met a lot of people that run these companies as well, right? So maybe talk about them a little bit, because I'm interested in those leaders. That's what this podcast is about. That's what I'm going to continue to have these people on. But maybe talk about what characteristics in those folks.
And let me back up. I think for us, our clients fit a BAMA personality too. Okay. They really like, who do you want as a client? We like hardworking, salt of the earth, humble business owners. And by their nature, they don't think they created it. By their nature, they recognize it was the team that they have, that their people work hard to help generate the business that they generate. And that's not to say there aren't cocky son of a guns out there that are leading and doubling and tripling the size of their business. We see those. That's not the same persona as to who we want as a client. We like the regular Joe who needs someone. This, I call it shark infested waters when you're about to sell your company. And so here they've had this business for 20, 30, or if it's a second generation, the Alabama story, 70 years in the family.
Wow.
And it's they're only going to sell it once, and they want to make sure it's right, and they want to make sure whoever comes in doesn't blow it up, when they know everybody responds to the culture that they built. That's a humble, high integrity culture, or a servant spirit model culture, that you see that modeled in their business, and they're really successful as a result of that. So I will say I've seen all kinds of businesses. For my client, we like the hardworking, salt of the earth guy. He's built a 20, 40, 60, $100 million business. He can't believe it's worth what it's worth. Like when we tell him what it's worth, they can't believe it. And then it's fun to go execute, get him more than that, and then watch their generosity. This is going to be another dynamic that I'll tell you. I think our best clients and our best stories, I look back, and if we blow away the outcome for them and the number, they don't take it all. They want to say, man, it wasn't me. These guys help. I want them to be shareholders in the future, or I want to bonus them this, or how can I take care of this person if they're going to not be part of the future? They really should get something as a part of it. So they're very generous.
Okay. Yeah, so you've met a lot of different types of leaders, but those are the ones that you're looking to work with. They tend to be the better clients for you. Is that it?
We've sold hundreds of companies, about $2 billion, just under $2 billion of transaction value. Mom and pop, private company, high values and culture, though. That would be the dynamic. When you go in, they know who they are.
Hmm.
The employees know who they are. So getting back to who are we, where are we going? How do we
Yep.
do business? How do we exchange with our customers? How do we exchange with each other? That's really strong in the kind of companies that we work with, because then they have good performance. Believe it or not, those attributes turn into 15 or 20% EBITDA margins if it's a manufacturer, which are better than the 10 to 12 to 14. If it's only about the money and everybody's grabbing for themselves, you don't get the same outcome.
Are a lot of these folks that lead these businesses, are they typically the founders, or are they maybe second owners or second
First
generation?
or second generation. Yeah.
First or second generation typically for you. Okay. All right.
Typically. Right? Again, we've
Yeah.
sold over 200 companies. I'm sure we've had some third and fourth generation clients, but I bet that's on one hand out of 200.
And is the sale a lot of times because there is not a leadership exchange or a future handoff with other leaders or the family, or what is the reason a lot of times for you?
I think most of the time they have so much of their wealth. If you have $100 million business,
Yeah.
they don't have 100 million liquid somewhere else. Maybe they have $10 million liquid. They have put so much money into their business that they really do want and desire a liquidity event. And one of the most common things that we talk about, if you're the business owner, you are the business owner and you don't turn it off. And when you take your shower, you're thinking about business, and they just don't want to have to do that anymore.
Yeah.
I want to be retired. They say, I really want to go play golf and not think about business. I want to go fishing. I want to go travel with my wife. She keeps saying, let's go to Europe. Let's travel. Let's do stuff.
Yeah.
And I don't want to have to think about it.
I had Doug Farron, who is he's a director for the National Center for the Middle Market. I don't even know if you knew that there was a National Center for the Middle Market. Most people don't. He's at the Ohio State University, but he was telling me some of the characteristics he sees, and he's been doing this for, I want to say 13 or 14 years. Most of them family, private businesses, right? Most of them have been around for decades. They know who they are, to your point. They've been successful at what they do. They may not have expanded as much as they could because they're doing what they do where they're doing it, but they know how to be successful, right? They know how to work and operate through many different business cycles. And he gave this stat that he said, this has held up the entire time that they've been studying this. These mid-market companies typically grow 2 to 3 times what either large corporations or small entrepreneurial businesses do. Does that stat surprise you?
Not if you include institutional investment. I would think the mom and pop on their own, they do not grow that fast as a stat. But I would say most of those companies are the ones that get institutional professional investment in them, and then they're going to grow really fast.
So
they do.
Yeah, I believe it. And his stat on that, by the way, was 60% have some kind of private equity investment, some investment.
That's going to drive the growth number in that stat. Private equity is not investing to sit still. Right. The only way those guys make money is if they double or triple the size of that company in 4 to 5 years. So right away, before they even close, they are looking to make sure that the team and the leadership is in place to take this business from where it is to doubling or tripling over the next 4 to 5 years.
Yeah, and that's pretty common. I hear that a lot from private equity. Yeah, okay, that makes sense. And does that change even with that 15% that's at the top of that list for you in private equity? They're still looking for exactly the same thing?
They're looking for the same thing. The way they go about getting it, and why I think they have more success in getting it and a higher percent that will get it, is based on the dynamics I mentioned earlier. Just humility, asking great questions, not being the smartest guy in the room, but they're wicked smart. They have a lot of experience.
They find the best direction. They're always open to new ideas. They explore every idea that's going to get them to where they want to go.
We watch the young guys that they think they know, like you can see it starting to come down the track, the person that doesn't have any business experience and they want to put some book smarts into a 55-year-old who's been running this thing for 20 years. And all of a sudden you'll see it go sideways if they're not really respecting the knowledge that's in that leadership and the experience that's in that leadership.
Now, for most of the businesses that you've sold, do the leaders stay on for years or do they try and get out most of the time?
It completely varies. We just want to know what the leader wants to do, what the business owner wants to do. It's highly probable with the right group, you're going to have a great outcome in 4 to 5 years if you want to do it. Okay. Yeah. Highly probable with the right group. And then, but you don't have to, because and again, it's common that we see guys that are bumping relatively flat, growing 5%, 40 million, 40 million, 38, 42. They're just bumping around there. They couldn't blow through that level. And then private equity comes in and they just know how to get it to 100. And do you want to be part of that and not have it all on you, where you don't have to think about it like you think about it today as the sole owner?
Having met many of these folks that have built a business and that business is their baby, it's their life, right? It's hard to maybe turn it off in a year. That's really the transition. It's also hard to come together with somebody that's going to run the business as well, because you're used to doing both. Do you see that kind of conflict with some of these leaders, and how do they deal with it?
And they have some good soul searching to make sure that they are equipped to take the next step, that they really understand the change that's about to happen. And if they're not, to fess up that maybe I just want a board role and I want to participate strategically at a minimum level and help find the next CEO, my replacement, who's going to come in and take this to the next level.
Okay.
Like, we really encourage that kind of honesty, because it's not fair for anybody, the buyer or the seller, if they're not being honest with themselves on what their experience is about to get, and if they're signed up for it.
Yeah, and some of them may not know. So you must bring that kind of reality to them. Is that an important part of what your relationship is with them? Yeah.
Yeah, just what it is, what your day will look like. And again, we don't want to sugarcoat it, because it's robust, it's fast. And but the nice thing is it's not on their dime, no personal guarantees anymore, where up to this point, everything is financially on them. It's after they've taken the chips off the table that they want to take off. And let's say they had a $30 million deal. They may roll over 3 million, but they've cashed out 27 million. So they're content to say, I could be the main guy, I could be a board member. Yeah. We don't want to lose what they know. They're really talented. If you don't want to go into the grind that's about to happen or the extra work that's about to happen, let's do it. There's other times guys don't mind the grind. They just want a partner. Like, it's lonely at the top. It's lonely having to figure out like big decisions, acquisitions. How do I double the size of this business when you're stroking the check all the time? Take that off, exhale, and now think, wow, money that's not the big restrictor to me. Now let's do the best decision for the business. We need to pay X amount of dollars to go buy that company, or start that greenfield initiative, or start a West Coast operation. Yeah.
And in many cases, this is their baby. So I think it would be hard for them to walk away. It'd be hard for them to say goodbye to a lot of their employees who are, in a lot of cases, they're very much like family.
Yeah. Very hard.
Yeah.
Yeah. We have seen that.
So you've talked a lot about some maybe unique things about BAMA, but maybe summarize it for us. What makes BAMA unique, the offering you have for this particular client base in the lower middle market?
This gets back to who is our ideal client and who do I want to help and who do I want to serve. I want to help and serve the guy that really cares about their people and took care of their people, and that they spent their whole life building a culture and don't want to see it upended. Mm-hmm. To us, culture is the most important thing. So as we are vetting buyers, we are listening for cues. Are these guys going to fit with ABC company and our client? And can I see them really enjoying going out and playing golf or going out to dinner together? Can we see that psychographically there's going to be a lot of mutual respect here?
Okay.
And if the cultural alignment is there, the money's going to be there. People often lead with the money first, and then they don't get the right culture. And I say, if we focus on culture first, the guys that have the best culture are going to love you even more. They're going to pay even more because they're looking for it too. The guys that are really culturally aligned, they're looking for the guys they want to go play golf with or have dinners with and really enjoy working through challenges and problems together in a really constructive, positive way.
Okay. Okay. So they're relying on you being the matchmaker and your experience with these people. And I always used to think about acquisitions as 1 + 1 should equal 3. You're trying to get that scenario, right? That's what you're trying to
absolutely, absolutely.
Yeah.
But 1 + 1 could equal 1/2 if you're not at the same culture and the train falls off the tracks when you try to merge. You hear it all the time.
Yeah.
You hear about the mergers that don't work out or the acquisitions that don't work out. And it's almost because of ego and culture. Somewhere along the way, someone was the smartest guy in the room. And now you don't even get what you got, what you bought. You get less. You get your top talent leaves.
And you've certainly, I'm assuming you stay in touch with many of these folks, and because you have a relationship with a lot of the private equity, you see how these investments have gone. Is that right?
That's absolutely. Yeah. And a lot of our clients roll over equity. They can make more money in their little tiny 3 million rollover than they made on their 27 million.
Wow.
It could be really good. Sometimes someone could get 10, 12 times that $3 million.
Wow.
Right.
Good for them. They're ecstatic then, right? They took the chips off the table. They got a great investment. Their business is now taken care of. Other people that they had grown up with in the business have been taken care of. So that's the best of all worlds, really. Yeah. Okay, cool. All right. So let's maybe shift gears a little bit here. So as you think about some of the toughest challenges maybe for you or for your clients in the next year or so, what do you see?
I'm going to say universally, we have always seen that folks are challenged in growing revenue. Like sales are always hard. And you could be in an HVAC services business. You can be environmental services, a widget manufacturer of metal parts. And stuff happens beyond your control. You've always got to be filling the funnel. You don't retain everybody that you thought you were going to retain. So there's some attrition. And I would say that there's still so much room to excel. Obviously, the part of the professionalism and the professionalism process is to really professionalize that sales function. And they're bringing Salesforce or other software programs, and they'll outsource some of their marketing. So they're always got leads coming in, and they'll revamp the website and add social media. But it's on the board of a private company right now. And we're still talking, how are we going to grow sales? How are we going to drive sales? So I see that everywhere in my business. Where's our next client coming from? I see it in my client's business, where their next customer is coming from.
You got to grow the volume of the business. Yeah. And I spent a lot of time in a business that was a distribution business, but it was sales and distribution. So we were looking for salespeople and finding the right salespeople, training those salespeople, managing them. Is that a key issue that you see all the time with many of the businesses you work with?
Yes. Yeah. The requirement to train and develop, but especially in sales. I think it's easier to train finance people to work on the next ERP and to build the next dashboard. I do think it's harder to acquire and find the best sales talent that you can to go hunt and drive and bring more revenue into your business.
So that was a question I wanted to ask you too. Retaining top talent is probably one of the issues I hear more often than not from my clients. And it was an issue when I was leading businesses, right? It doesn't go away. Do you feel that today, both in your business and for your clients?
Yeah, I think the key though is that you pay them well and there's accountability. The best talent really want to be accountable. They want to know what their goal is. And then if they hit it, they want to be really well rewarded for it. There's oftentimes a gap that maybe somebody doesn't really know what they're accountable for. They don't really know that our goal is $40 million this year, and I'm responsible for making sure we hit that. And then if we do, there's no difference in compensation sometimes if they do 40 million or 35 million. So just making sure that it's really consistent, it's well articulated. What are our goals? Where's the accountability? And if we do, this is what you get.
Yeah.
I see more inconsistency in the ability to generate consistent sales.
Okay.
Okay.
And you think it's mostly due to talent, or do you think it's the strategy?
I think it could be both. I think some people don't have growing sales as a strategy. And I'll give you a great illustration. We sold a division of a public company before, $30 million of revenue, redheaded stepchild, didn't get any love, it was an internal service thing. And the private equity partner got involved in it to help it grow. In 2.5 years, it was 125 million of revenue, 2.5 years. And it's because in the public company, they didn't care. It wasn't, you were just a service center of the big beast. And when it could be unleashed from that, it grew. Now watch this, that $30 million business in 2.5 years grew to 125. That private equity group sold it. The next buyer, because I'm friends with the CEO, he stayed on board. He got equity in the deal. The next buyer came in. That CEO took it from 125 to 250. He stayed on one more. They sold it. That was about 2.5 years. The next group came and took it from 250 to $500 million, and then he retired. That was a $30 million business that over the course of 7.5 years grew from 30 to $500 million.
Wow.
Isn't that crazy?
Yeah. So that story maybe encapsulates a lot of things, right? So you had a business that's standalone, somebody cared about, wanted to grow, right?
So somebody asked the question, how do we grow it?
Okay.
How do we grow this business? That's right.
Okay. And the decisions that followed from that probably were big, right? Because they weren't happening in the public company. Those questions weren't even being asked, right? How do we add the people? How do we add the services? How do we take care of the customers better? What markets are we in?
We're not putting money into acquisitions for this division. That's not our core business. Our core business is, this is where our capital goes.
Okay. And was that $500 million company? That was a standalone business then?
Standalone business, $500 million.
Wow.
And it became like a really large environmental industrial services business.
Okay. Interesting. That's great. What a good success story.
Great story. Yeah.
But it could be, that analogy could be made for any business, I think, because you and I were talking about this, right?
You have to ask the question. And I sit down with a new client and I could tell it's like, okay, you're 14 million of revenue. How are we going to get to 30? Are we going to get to 30 in 3 years? Like they don't think 30 in 3 years. But until you ask the question, they're never going to look for answers that help them grow to 30 in 3 years.
So the size of that brings up another question, because I always felt like strategic planning was really important, right? Every year we did it, and you had a longer range plan, but you also had that short term for the next year. Do you find that in these businesses that you're working with, do they have a process around strategic planning?
If they have EOS, they do, Entrepreneur Operating System.
I do, yep.
So if they have EOS, they are going through that system and there's some strategic planning taking place. And that's not 10% of the company. Maybe it's 5% of the companies out there. Okay. Like I do light up when I hear they're on EOS. I know there's accountability. If they're running, like really running the system, there's accountability. There's regular review. Are we hitting our goals? Are we not hitting our goals? Is this the right person in the right seat on the bus? So all that stuff really happens. If it's not on that, it's rare. It's amazing how often we say, do you have a budget? Do you really have a budget? Because they look at last year and they just want to do as good or better than last year. And that's their budget.
Yeah.
And so you get to a certain size, you're not wanting to rock the boat. I'm 60 years old. I'm 65 years old. Like, now I'm getting dividends off of this. I like the dividends, like the freedom I'm starting to get. Do I want to double down and see that cash flow go out to pay for growth? Do I want to double down and take risk? I don't want to take any more risk. And you see them flatten out 50 million, 50 million, 50 million, or 10, 10, 10. Yeah. I will tell you, this is real common. People stop about everywhere that the business doubles. So tons of people stop at 10 to 12 million bucks.
Yeah. Okay.
And then there's a bunch that can get to 20 to 25 and they stop at 20 to 25. Like all of a sudden, a big bunch of governors. It's like, I'm stuck there. The next thing, if you get to 25, your next goal is 50, they get stuck at 50. After 50, it's 100. It's always to double the business. And it's almost always the people. Do you have the people to run a $50 million business, which is different than a 10?
Yeah.
And the quality of the people there. So the leader has to be asking, if I'm 25 now and I want to be at 50, do I have the right people to take me to 50? I might have great employees, but I might need to get 2 or 3 just rock stars in here that it'll be worth whatever I have to pay them to help me get to $50 million.
Okay. I can see that.
And that's what private equity does. That's part of their playbook, is so much on people. And they're going to challenge. When you come in, they're going to challenge. I know Debbie's really nice. She's been a great controller, but is she going to be the controller to take this from 25 to $50 million? You need a CFO, right? Let's keep Debbie, but let's bring in a CFO that's really going to pop this thing up.
And it's unemotional, right? They don't have an emotional attachment to those people like the leader of the business does. Because if you're going to double or quadruple the size of a business, you're going to have people that have been with you a long time. Are you ready?
Debbie helped them get from 5 to 25.
That's a lot of difficult decisions that some people just aren't ready or willing to make. So you've probably seen that multiple times. And let's go back to that question about challenges. We've talked about some of them, the longer term being strategic planning, shorter term finding the right people, growing sales. Look out a little bit longer. What do you see in the next 5 years that are going to be a challenge maybe for your business outside of the ones we've talked about or your clients?
I think AI is a real unknown on how much it's definitely going to impact. It's definitely coming. Let me start out by saying that you have to adopt it and not put your head in the sand, and it will impact all of our businesses. So
do you use
I use it a little bit, and I want to learn my top 20 agents, AI agents that are going to do specific tasks for us.
Okay.
I do use it on some, I'll call it strategy, and I'll call it some marketing plan, some copywriting for email campaigns, and putting a campaign together. And it provides a good starting point. Like, okay, that's good. Now let's enhance it. Let's work it. But I think it's getting smarter even faster, that I don't want to sugarcoat that our lives are going to change a lot. My son is an executive in marketing, and they're adopting it like crazy.
A lot of businesses are, right? I think it's good, frankly.
As I'm talking to him and he says, no, we are adopting AI. It's going to completely change how we do business. And it'll change how we do business. It'll change even the HVAC services guy, but I do think you're going to see a renaissance in folks that make great livings providing services to people like that. You're not going to AI that out. Someone's got to still evaluate it. AI can help in evaluating it, but change the parts and fix stuff, and stuff's going to continue to break.
Yeah, it'll change employment. It'll change what people work on. on how they work. I think that's interesting. And I think the people that want to grow and adapt, those right people that you're talking about, the right people in the right seats, the seats might change and what they do might change, but that's okay. As long as they're willing to adapt, now you can still continue to be productive and it's going to be different. I don't see them taking away a whole bunch of jobs of people. They might take the tasks of many people and the jobs will change. That's the way I view it. I don't know if that's how you view it.
It depends on the company. I think if there are a lot of administrative office function, data input, if you have 50 employees, you may move down to 10, and you're not going to be able to move 40 in that area around your business.
Yeah.
If you had 50 employees who were in the field doing work and 10 who were in administration, maybe 10 goes to 5. And the other 5 say, no, I'm going to go out in the field and learn how to be a field tech.
The number of people required probably will go down, though. You're right. And what a great efficiency tool to run a business, to do anything, frankly. My daughter-in-law was telling me she used it to plan her vacation that they're putting together because ChatGPT could give her a lot more information very fast.
Yeah. I just did that for a vacation I go on next month.
Oh, did you really?
Yeah, Dublin. I'm in Dublin for X days. What should I do? They gave me the whole sequence of what I should do for 3 days in Dublin.
Yeah, see? Yeah. And now vacation planners, it's a much different job. They're really just maybe setting appointments or doing something. I don't know what else they do, but that job has changed too. All right, so let's keep talking. I want to talk a little bit more about your experience here. You probably had many interesting people that you worked with, sold their business, helped them sell their business. Maybe think back to those ones that really impressed you, whether it was the people or it was how they did business. You talked about some generic things, but is there anything more specific maybe that you said, wow, they were really together?
A couple. I'm going to outline a young executive in his 30s who never went to college and grew a beautiful $40 million business.
Okay.
And he was so loved internally by his employees and externally by his customers. You could not win business from this company. And it really was the tone that he set, super high integrity. I will do anything to deliver on my promise of what I said I'm going to do.
Okay.
And I will, if there's some hell or high water reason why I can't, I am going to be there. And you're not going to chase me. I'm always going to be up front. I'm always going to tell the truth. Here's where we are. And he got huge marquee Fortune 500 company customers. They keep saying, I want you to do national. I want you to take care of me there. It's so rare because again, I have hundreds of clients over the years. Mm-hmm. And to see that, yeah, this company really does deliver. They do whatever they say they're going to do, when they're going to do it, and it's on time and it's on budget, and that's who they are. Yeah. And everybody's friendly, and everybody has this that's who we are. We're going to serve you. We're going to make sure you get what we bargained for. Mm-hmm. So good attitudes, just always coaching and leading, because it's a combination of both. He led by example all the time, not afraid to jump in there and help out at 2 a.m. Like, mm-hmm. I'm going to be there too if there was a big emergency response or a disaster. I have another one, and we've worked with him on 2 different times. He was a professional leader. We got engaged to help him grow his business through acquisition. They had a really nice run, and then it was sold to a global business. And then he got involved in another business, and the business that he got involved with had been really struggling. And it's just amazing to see you get the right leader in there. And I would characterize his superpower was to so quickly ask a bunch of questions that everybody is focused on what is the issue, mm-hmm. and then solve the issue and move on. In 30 to 60 seconds, it didn't matter what the problem was. Mm-hmm. He would hunker down, or maybe they've been talking about it, but nobody at the leadership spot could really articulate it in a manner that said, okay, now we're going to fix it. Let's go.
Okay.
And so that was step number 2, but he could identify it. And then you had a lot of accountability and action, and we're going to put a plan in place to go make it happen. I think other ones, I talked about how hard it is to find a really good sales organization, but one does come to mind, and their whole culture was around sales. And the salespeople were the kings of that culture, and the leadership, just top sales leadership by this owner who knew how to motivate his guys, to have accountability, to have charts every day of what's going on. And you knew if you were there or not there, and we're here to help you get there. Let's go get there. But there's that constant causal pressure. And that was a business 50-ish million 4 years ago. It's 200 million-ish today.
Wow.
And just really good leadership. Another thing about that guy, he so valued his salespeople. I don't remember the total number for him. 12 to 15 guys got to get equity in the deal during his first transaction, but it was a bunch, almost all of the salespeople. Like, wow. Hey, you've helped us get to this point. You're the rocket fuel that makes us roll. I want you to be an owner in this. And we were able to negotiate that with the partner that we want all these guys to have it. I had another one, had 24, 25 of his employees become owners at part of the transaction. And this was one really based on generosity. He was like, I want to be that guy that puts this into the hands of people that make it work. Even some of the key administrative people who were there that weren't necessarily part of the management team, but they just make it run really smoothly, really well.
Yeah.
And so to see, again, they were humble, great leadership. They wanted to bring people along with them. And those would be a couple of the folks that come to mind.
You mentioned a couple businesses that people probably wanted them to grow. You mentioned the $200 million sales-oriented company. So when they went from 50 to 200, that culture didn't change. They were able to maintain it. Yeah,
that's right. And they went after they acquired some average businesses and put strong sales leadership in there. This is the recipe. We are a sales organization. It's not just distribution. We're a sales organization that distributes. He knows that it is the guy at the head of those divisions that he has acquired, as well as his continued organic growth, that are key to continued successful growth.
And to your point from earlier, they knew who they were. They knew how they could be successful, and they replicated that, and they were able to grow it, which that's not always the case. You mentioned the $40 million business where it was all about the relationships and the service that they gave. Sometimes if somebody wants you to grow that to 80 million, you have a hard time doing that, especially if it's in multiple places. Did he end up expanding that $40 million business you were talking about earlier?
He sold to actually a family office. Ended up partnering with him, and he stayed in to some degree, but it didn't grow like some of these other ones that I'm sharing with you, just the dynamics of that one. A family office doesn't have the same, we've got to exit in 4 to 6 years. They're like, hey, I'm going to have this business for 20 years. And so they do have a little bit different mindset on it, but it was a good fit for him.
Yeah, no doubt. A little bit longer term. They're going to hold it for a long time. Family office.
How does this tie to some of the clients that you consult with? And is most of your consulting around strategy, leadership development, improving margins? Like, where's your niche?
My niche is probably leadership development, I would say. So I would say mid to high level people that haven't had a coach, somebody that maybe hasn't really taken a close look at themselves to maybe get to the next level. So that's really what I'm helping them do. Take a look at themselves, where they are today, and people around them. And then how can they break through with those kind of things that might be holding back that they didn't even know about? Because I think there's a lot of that in business leaders. If you haven't had a coach, I would say get one at some point. if you're an executive. Matt, I had a good, just quick story, a chance in my career 4 times to have an executive coach. Every single time I gained something that was helpful for me, that helped me continue to move on. So I think, to me, we have coaches throughout our lives. Why wouldn't you have one in business?
What would be the most common place where executives stub their toe, like the low hanging fruit when you go in, that most folks really benefit from?
There is some personal characteristic that holds them back. I'll give you an example. One particular client I have right now, they really are thoughtful, and they are very slow to make a decision. And when they want to make a decision, they want to be able to go with it, but it might take them a long time to get there. Part of any business, if you're trying to grow, sometimes you have to have good information with the right direction. You got to move forward and continue to adjust as you go, as long as you have a clear direction on the end. So in that case, I think it's, how do you move a little faster, or how do you surround yourself with people that maybe could move a little bit quicker? Because your way of working might get you there in a year, but a lot of people want to get there a little faster.
Right.
Yeah. So there's things like that, but it's all personal stuff is what I would say, Matt. So it's something that for them that they maybe aren't aware of, that really it's an aha moment for them most of the time. What can we do that's different?
Awesome.
Yeah. So let's talk about you for a minute here. Who has been your best coach or mentor? Speaking about coaches.
When I was in the fitness business, the gentleman's name was Steve Smith, and we were all young. We were 20s and 30s, and he was probably late 30s at the time, but he gave us so much rope to run without a lot of over management. And it was everywhere in our organization. It made us run really hard. We tried a lot of stuff. And if we failed at something, he was so fast. Hey, now we know it doesn't work that way. No problem. And it didn't matter to him. Like, he loved seeing the growth in people around him.
Mm-hmm.
And it was everywhere. And this business became leaders all around. Like, our leadership team became leaders all around the country in the fitness industry. Really amazing leadership development. And it was, you can do it. You can figure it out. Go do it. It was like, get it done. And then, oh, what do I do? Okay, I got to figure it out. But we have like our little alumni calls or things from time to time, and we all recognize how special he was at letting us just run and trusting in us more than we trusted in ourselves, believing in you more than you believe in yourself.
Okay.
So I would say that.
And then all the people in the alumni, they do that today then? Is that it?
I don't know if they all do it to the same degree, but they know there's magic in that. Mm-hmm. And they've grown really nice businesses.
Yeah. That's
really, really nice businesses.
Everybody should have somebody like that, right, in their career. Yeah.
He was special. He definitely really special. Humble, put himself at the bottom of the barrel all the time. And he wanted you to get the accolades. He wanted you to drive, and you go figure it out and make it happen. And I know you can.
As we've been talking, I think I sense a lot of the things you really like about your job, but maybe put it in a few words. What do you enjoy most about your job or your business today?
I love learning how different leaders have taken a different approach to the same business. And as an example, we've sold probably a dozen landscape companies. We've sold 8 to 10 HVAC businesses. Mm-hmm. And they're all different. Probably 12 to 15 manufacturing of metal parts businesses and fabrication. They are all different in how the leader took an approach to it, on how they grew their people. I thought that guy just had the absolute best way to do it. And that is a better way to be more lean, or have just-in-time manufacturing, or reduce your CapEx spend, or what should I outsource versus insource. as you're
Okay.
doing what you do? Or how do you manage your route, like route efficiency? When you look at these service businesses, they can make so much money if you really do route management. And again, somebody sat down and said, boy, it takes us 15 minutes to go from here to there. Let's make sure it's 5 minutes in between jobs that are coming up. And they make so much more money that way.
You have a unique chair, your perspective, where you're really looking at the nuts and bolts of the business.
They make money.
Yeah. And so that's cool. The comparison would be interesting to see with businesses that are somewhat similar. Yeah. So that's a fun job.
We all see culture. And I think culture beats strategy for lunch, or whatever that phrase was. You do see it. I see it. I see people at company, and again, it's not so common. If you can really build a killer culture with accountability, you're a killer. Like, you are out there, and it's hard to compete against you.
Yeah,
it's hard to get better talent. The best people want to work for you.
And in today's world, that's key, because it's hard to find good people. That's the toughest thing that I hear from everyone. No doubt about it. Okay, well, we're running out of time, so I got one more question for you, Matt. Save the best one for last, all right? So if you were going to give some advice to a new executive or a new CEO based off your experience, it could be any type of business, what would it be? What would you tell
them? Number one, know who you are and commit to doing what you say you're going to do and having really high integrity. Like, that will get you so far, so fast, and sprinkle humility over that. Like, high integrity, do what you say, and be humble. See how you can serve the people that you're leading, and they'll climb mountains for you.
And you've seen that probably over and over with people you're selling, right? I'm guessing that's where this comes from, right? Yeah. Okay.
And I've seen when they don't have it. Like, I want to be clear, not every client that we have has killer culture and amazing leadership.
Yeah.
They don't. So you can see the contrast when it could be floundering, it could be stuck. Mm-hmm. But when you see these ingredients and there's energy, and when we're giving updates, they're exceeding their budget because they do what they say they're going to do. And
Good to Great is a book I really liked and have enjoyed because it's all practical stuff. That's for bigger companies. You could almost write a Good to Great for emerging middle market companies. I think you've had that kind of experience. Maybe that's your next job at some point in your life. I don't know. Matt, listen, I've really enjoyed this. You've had a lot of really good insights. I appreciate everything that you've shared with us. Can I ask, if somebody wanted to ask questions, where would they direct them to? Do you have someplace on your website that they could direct questions to you?
My email, I don't know if I should give that out to you, but it's MATT@buysellyourbusiness.com. Tells you what we do, buysellyourbusiness.com, and Matt with 2 T's.
Okay.
And then our corporate office number, 704-295-0102.
I'll put that in the show notes so the people can reach out to you if they need to. But listen, I really appreciate you being on the show. Thank you.
My pleasure. Thank you, Jeff.
All right.